Saurabh Bajpai, DGM from SIDBI, sir. We are still waiting for Shri Anjan Dasgupta from Asha, India, and Shri Saurabh Bajpai. इन लोग कहीं पे भी दिखे, please इनको stage पे लेके आइए. May I please request Shri Tamal Bandyopadhyay, who of course needs no introduction, as the moderator of the next session, which is about analyzing the financial inclusion landscape, customer segment, as well as macroeconomic trends. Please come up on stage, along with our panelists, Shri Gigi Mamen, Executive Director Sadhan, Shri Anjan Dasgupta, MD Ashai, Shri Sachin Sachdev, Vice President and Sector Head, Financial Sector Ratings. ICRA, please put your hands together and welcome our panelists on the dais. Shri Abhijit Rai, and we're waiting for Shri Saurabh Bajpai from SIDBI. Ladies and gentlemen, please take a seat. Those seated towards the back of the hall, request you to please take a seat.
Good afternoon. We are late, but not slightly. 43 minutes plus. Supposed to start at 2. So tell me how much should we allot? I think with the panel's permission, definitely not 1 hour 15 minutes. Maybe shall we cut it to 50 minutes or something like that? For that, I can go for 3 hours. But for the 1 hour, still you are okay? I mean, Chairman, when should we end? That's inclusive of that, no? No. In this audience interaction, inclusive of that 1 hour, right? Okay. So with that permission of that, which means we will end sharp at 3:44, right? All of us. It's a very generalized topic, financial inclusion. I don't know what new we can say, but quick things. It's a very interesting time. If you look at the SFBs who are primarily into microfinance business and all, you look at their balance sheet now and 3 years back, everybody's sole ambition is to now bring down the unsecured loan as much as possible. You see that those who are 90-10, now they are getting, meaning 90 unsecured and 10 secured, now they are going 60 unsecured and 40 secured, and they want to do even more. So there is a sort of, what do you call it, because every second year, third year, fourth year, something or other, be it some state election or COVID, which is a worldwide phenomenon, or budget and loan waiver, these are unsecured creditors. They are being most affected for the external circumstances on which, however good you are, however efficient you are, you don't have any control. So that's one part of it. Those who are into microfinance segments, they are getting out of it slowly. Ask any investors, they are not interested. I mean, I'm sure there are many who are looking for investment. They would not like me saying this, but I do talk to investors on a regular basis. They are just not interested. They said, no. I mean, we are not convinced, because this model itself will make money for 2 years, then next 2 years will not make money. I mean, how do you ensure, where is the safety, etc. Then you see how technology is also changing. I mean, you look at any microfinance entity, be it NBFC or be it a society, everybody will say one thing, just all my disbursement is digitized, my collection, somebody 100% is physical, somebody is 20% physical, somebody is 10% physical, etc., etc. And then you have a regulator, Reserve Bank of India, as you know, they have from this fiscal year, current fiscal year, they have changed the entire way to approach microfinance regulations. It's now activity-based, no more entity-based. And finally, what's happening is this, Reserve Bank of India, the way they manage banks, I mean, in terms of supervision I'm talking about, they are now focusing in the same way to the NBFC segment. From bank and NBFC, they are now, it's a systemic supervision. It's not happened fully as yet, but probably in the next 2 years, you will find that banks, NBFCs and UCBs, urban cooperative banks, all in the same net, because they need to, RBI wants to see the flow of money from where to where. So everything is changing. But what is not changing is the term financial inclusion, which Dr. Reddy sometime early this century, one of its monetary policy documents spoke about it. As all you know, he was looking for the right expression. So there was discussion about exclusion, then somebody said, no, why not inclusion? That's how the financial inclusion started. So regulatory landscape has changed. The way you do things have changed because of technology. Investors' interest has changed. And also your interest, some of you there, your interest has changed. Chandrasekhar Ghosh was here. He is a bank but primarily into microfinance. But look at his balance sheet. His objective also to bring down microfinance as much as possible, because the general perception is this unsecured loan risk is too much. So with this background, my talk is ending. I'll just ask each of you to start. I don't have any piece of paper except for this who is there and all. So there is no preparation. Extempore, we'll make it interactive, we'll make it interesting. And it's a very interesting composition of panel. Asit Babu, I must say. We have from rating agency, so his way of looking at things different. We have Gigi, who from his earlier background, and now he is an SRO boss. So he has the entire industry under his lens. We have Anjan Das Gupta, who runs his own organization, and we have an investor here. You are in the form of an investor? How we have come here? Huh? Abhijit? Huh? Sorry? As an investor and lender. So you have every constituent been filed. One gentleman is not here, not yet. So let's start. Probably we'll start with Gigi, because we'll go from some preliminary remarks, how things are changing, and then we'll pick up a few things. And we will take questions, so please keep at least one microphone. We will not wait till the end, okay? We will not wait till the end. In between, we will take questions. So it's 2:49, 3:44 we'll end. We have little less than 1 hour. Within that, in between rounds, we'll take questions. So you just raise your hand and introduce yourself, and very brief one-line question. No commentary, no observation, just question. Okay? And it's not a grievances box. So don't say that you have not got loan, Anjan Das Gupta, from you have not got loan, we applied for it. Not like that. Ask policy-related issues. Here I end. Gigi sir, over to you.
Thank you, Tamilda. It's always a pleasure to be part of your panel. As regards the financial inclusion is concerned, yes, you are right that in 2005, when the RBI came up with the monetary policy, the first time the financial inclusion word was given as a program for the bankers to take forward. But prior to that also, there were several attempts of financial inclusion. If you ask me, right from the days of Britishers in 1908, when the Cooperative Societies Act was promulgated, probably that was the first attempt to bring banking to the people. But subsequently we had nationalization, we had lead bank program, we had regional rural bank schemes, then of course came the SHG bank linkage program, and then the microfinance program. They are all part of a large agenda of bringing banking to the lending to the people. So you are right that now what we are seeing is that there has been a drifting of the small finance bank and maybe bank like Bandhan away from the microfinance, and they are going more into the collateralized lending. It's quite a natural process. That's what I would say, because when they have become a bank, they can still continue with the microfinance portfolio alone. They need to expand themselves. That is precisely why they were made a bank. So they need to have a different variety of diverse products, and they should be able to provide all kind of financial products to the people. At the same time, there should be other institutions coming up and filling up their space. So the NBFC MFIs will grow into size, and they may become 15,000 crore, 20,000 crore companies. A smaller MFI will become a NBFC and start lending in a larger way. New institutions should also start coming up, especially in areas where you feel that there is a credit deprivation taking place. Instead of taking the existing players to the newer geography, probably it's always a good idea to develop the institutions which are already there in the form of maybe a developmental institution or so. They can be developed into a financial intermediary kind of a player. They can do the financial intermediation and become a NBFC, MFI and grow. So this graduation, this movement has to happen, and I find there's nothing wrong in that. As regard the investors in interest is concerned, probably after the pandemic, what I understand is that the outside investors probably they are taking a cautious call, and also the overall, if you see the overall, the inflation rates are changing, the rates are changing across the board. So there has been a little bit caution from their side. But I would only urge upon the Indian investors. We are talking about Atmanirbhar Bharat. When you are talking about Atmanirbhar Bharat, we should have a Atmanirbhar investment also. There should be internal insiders in the country. They should come up and start becoming an investor to the MFIs. Now, if you see, most of the MFIs, their investments are coming from abroad, whether it is from the States or from the European countries or even Japan. So they come and invest and they take away a large portion of their profits to outside. Instead of that, why can't our own country have investors within us, and we don't have dearth of money? I'm sure there will be large numbers. So that confidence building is really required. Probably government also can play a role in encouraging the internal or our domestic investors to come forward and start investing in MFIs. Although there were schemes like IMEF with SIDBI, but they were all limited. They were all very small, only something like a startup. But to a larger kind of investment, there has to be specialized players who have to come domestically. Within, then only we can take it forward. So that is what my take is, that financial inclusion is a program. It is not a program by it. I mean, it is not going to end immediately, because financial inclusion is a wider term. If you want to talk about financial inclusion, it covers everything. We are now talking only of having a bank account or getting some loan, but there is other products also: pension, the insurance, the payment mechanism. All these things have to come into the play. Then only the financial inclusion becomes total. So it will be a program which will continue for some more time. I would say maybe a longer period of time. And we will be continuing to discuss these kind of things again and again in our next conferences and the conferences to come. But I'm sure India has done extremely well as far as the financial inclusion is concerned, especially after the 2005 is concerned. Thank you.
Thanks, Jisab. So confidence building, that's what's required, and financial inclusion is not only in terms of credit but other financial instruments as well. So let's hear on my left, Anjan Dasgupta. We heard industry body head. Yeah, I've seen that. Sidvi has joined us. So Anjan sir, up to. Do you just preliminary remarks, then we'll get into.
Hello, yeah. So thank you, Tamalda. It's always a pleasure being in your panel. This, as Gigi sir said, that it's a wonderful opportunity, and the opportunity is increasing now post-COVID. There were people who were under the poverty line, and there were people who were around the poverty line. So people who are little above the poverty line have also gone down below the poverty line, and they need to be brought back. And microfinance is going to play a wonderful role there, provided they have the resources, provided they have the bandwidth to reach it to them. But the issue here is, COVID has thrown up a lot of facts and data. There has been a lot of interchange of the good and the bad and the ugly. Ugly moving to good, good moving to bad. So that kind of roles have happened. As I say that, we have often discussed that whether microfinance should be a for-profit model or not for-profit model. Of course, yes, to get the investors, it has to be a for-profit model. But that should not get affected that, when the client we are dealing with, the base of the pyramid that we are dealing with, are in deep problem, and then we only think about profits. Profits are to be had. In a period of possibly 20 years, we must have made profits in almost 18 years. But you can't expect that every year you're going to make profit. Not that because of your organizational inefficiency. It is because of the whole system that we are operating in. As one of my colleagues mentioned, that microfinance deals with various I mean, a little bit of crisis affects the vulnerable, so it does affect the bottom of the pyramid. I mean, we have seen the AP, we have seen subsequently the demonetization, subsequently again this COVID happened. You know, like, I mean, a colleague of mine was joking that previously we were dealing at a local state level, then it became a national. Local level was, state level was the AP crisis, at a national level was the demonetization crisis. Now we are dealing with the international level crisis, which is the COVID crisis. Now, the moot question that during such crisis, are we going to show profits, or are we going to provide for whatever losses that can happen? And this provision is not only for the strength of the organization, is for the strength of the clients too. You know, so that is main important. Like, I mean, I was hearing a song, you know, it's okay to be not okay. You know, so it's okay to be not okay, you know, and during such crisis time, if we actually show that we are okay, actually we are doing harm to the whole ecosystem. You know, so why I said it is good for the organization, because if organization provides for it, future risks are provided. Why is it good for the clients? If we have provided for it, my clients can be given reasonable SOPs without that aggressive collection on them, you know, so that they can come out of it, you know, and then move on. That is how it should be. You know, but COVID had thrown up, you know, the old song was that most of you must have heard, the seniors out here, you know. Zahar dete hain to bolte ho ki peena hoga, zahar peete hain to bolte ho ki jeena hoga. You know, that's the condition of all our MFIs, you know, that these are going to happen, you know, but they have to be taken in the right spirit, they have to be taken in the right strategy, and I mean, ultimately we'll have to show what is happening in the field. That's how we are supposed to get back. COVID has thrown up a lot of issues, even in our financial reporting. Like, I have heard from lenders that, oh, their collection efficiency is 115%, whereas the collection efficiency is far below that. You know, now what is taken in the denominator factor, what is taken in the numerator factor, that is most important. You know, so again, there has to be a standardized financial reporting format where everybody is seen at a, I mean, equitable way, not equal way, equitable way, so that, I mean, a right kind of judgment can be made on a organization. And subsequently, even the lenders should get out of that, I mean, dream asking, you know, that every time you should be profitable, every time you should have this kind of ratio. I mean, they can forget it. I mean, we used to proudly say about 99.9% recovery. Even we have said it. We have talked about PAR at a level of 0.10%. You know, those are all bygone days. That is not going to happen. The PAR levels are going to rise. So they're going to be a different standard. They're going to be a different basis on which everything has to be viewed. Now, as I say, that, I mean, it's an old saying, I mean, I've heard it from my senior father, banker, who was a banker, that, I mean, bankers, they lend when the sky is absolutely clear, and they pull away the umbrella when slightest of the clouds appear. So we'll have to get out of that mindset too. You know, that, I mean, when the organization is facing issue, we should be there with them. I have been a banker, I have lent to people who have fallen into difficult times, and I have seen them how they have grown multiple times. I mean, when when our due diligence are done, you know, like, I mean, first thing they see whether we are applying coercion on our clients or not, whether we are having strong recovery practices or not. The same applies to our lenders too. You know, they also should appreciate that during difficult times, they should come in, be with the organization, and help them help the ultimate bottom of the pyramid. I mean, here we have been discussing, yesterday we had a very good discussion with the team, experts from Bangladesh that we have gotten, and it has thrown up a lot of positives that Bangladesh microfinance has. We have heard less crisis in Bangladesh. Number one, they are allowed to take deposit, even NGOs are allowed to take deposit. Number two, they have got a lending institution which is specifically for the microfinance sector. So now we should do a lot of brainstorming, we should do a lot of soul searching, whether we should have such kind of an institution where it will be solely dealing with microfinance institution, lending to them, and it should be, I mean, as mission focused as the microfinance institutions are. You know, we may say we are impact investors, just 1 minute, we may say we are impact investors, but it should not be a mask, it should be the actual face, you know, That's my last.
Thank you, Anjan Dasgupta sir. Lot of preparation, lot of optimism or stoicism. It's okay not to be okay. And then sab jahar peena ka. I thank God you did not say that Prem Chopra का ना रॉबर्ट उसको लिक्विड ऑक्सीजन में डाल दो. आपका तो हालत तो ऐसी है अभी माइक्रो फाइनेंस का लिक्विड ऑक्सीजन में सब है. हाँ ऑक्सीजन उसको मरने नहीं देता है, लिक्विड उसको जीने नहीं देता है. सो द सेम थिंग ही सेड. जहर का गाना भी ऐसा है. सो let's hear Abhijit. He is a lender and investor. And this gentleman, Ashit Babu, whispered into my ears, just you saw in the seminar, that Abhijit is planning something, sort of investment kitty along with AMFI. So maybe you can share how to, particularly in this part of the country, to ensure financial inclusion. What's the plan you are working on?
No, thank you, Tamalda. It's a privilege to be in a panel with you and all the esteemed guests here. I think thanks AMFI for inviting me. It's a homecoming for me. I've left Calcutta almost 25 years back. So every time I come back for any session, I always feel so happy that I'm back to my roots. And today morning when Ajitda was presenting about when the microfinance movement started in 1995, Ajitda, I hope you remember that that's when we supported you about 30 lakhs of loan from SIDBI when I was in SIDBI those days. We used to travel in motorcycles, go to the field and do our due diligence. So that's when we started the movement. So from 1995, I could clearly relate where we were and where we are today. It's a long journey, and I'll share something very, very contextual to what I think is to this region and what is very, very important for us to think through as we go forward, because the experts here have spoken a lot about, about where the industry is, what is the progress has happened over the years, where we stand today, and how, what Anjanda said very interesting is that we should take everything on our stride and move ahead. Don't think of all the negativities around, because industry will go through challenges and we have to stand tall, and that is the mantra. But coming back to, Calcutta or West Bengal has a different journey of microfinance than many, many other states, and I'm repeating this. Many, many other states. You probably know that one of the early starters of microfinance is, in West Bengal, and the movement moved more from a development to a finance. It was not a finance-led movement. It was a development wherein most of the entities which started, including Bandhan, started as an NGO, right? And then it went through different level of transformation as we progress in the last 20-25 years. So the journey has been slightly different, and we have to we have to put it in a certain context. Like when we are talking of regulation today, we are talking of all the changes. We have to think, what is the intent? What is the objective today for us? I mean, I'm not talking of one institution. I'm saying let's think of an institution which is an NGO and which is doing microfinance because that's relevant for their target client. But is that NGO thinking of going to, say, 28 districts around that? Probably no, because they want to focus on that area. Then there will be entities which are coming up, they think that microfinance is a business, very clear business, but they want to be regional. So I'm making it into three different buckets. So first, the NGOs which have microfinance as a program, then the small financial institutions who think that microfinance is a business, but they want to be local, nearly regional or local. And third is people who are starting with a very clear idea that we have to be national. And in that context, if you think, the approaches will be completely different, because then you can go with a development mindset in the first level, slightly profitable with a bit of capital in the second model. And the third one, which is thinking of a national or a very large microfinance, you have to always think your raw material is cash and you have to run after the cash. As simple as that. There is no second thought. Look at Satya, I mean, Vivek was here since morning, I think he has left now. I mean, in how many years what he has built, right? And it's all about capital. He continuously went on getting capital in the market. Ask Manoj is here, he has been running the institution. Without capital, this game cannot go on. And it's very, very important for us to think from that context that what is the object of our institution? If the object is a quasi-development, keep it differently. With a little bit of profit you can grow. If it is the object is to make it regional, small and regional, think of it friends, family and all, and say where from I can pull in some money and let it be with the profit, let it be afloat. But if you're thinking on a large scale, you have to think from day one, how to structure yourself for the larger goal of growing the institution, getting in capital, and plan things accordingly. You can't think of capital will come and people are there to give you capital. And this industry is such that without capital you can't grow. It's a leverage business, yes, of course. Think of it from other side that if today priority sector guidelines are taken off the table, microfinance will not be able to grow until there is enough capital. I mean, what I mean by capital is equity capital, right? So I think one has to think through that context and define oneself or themselves, and then think of what could be the strategy. Now, coming to a bit of products, I'll come to Ramalda, your question. I'm not planning anything. I had some idea I was giving Ashit, I'll share that. One of the things is like how the industry is overall changing, thinking of where do we make money from. Because see, everything has become very restricted. Of late, obviously, RBI has released the, I would say, cap on the interest rate. But still in the market, you can't go and charge anything you want. It's impossible. So you have to think of a multi-product, multi-revenue streams. And I'll not tell you what you have to do. You guys are tremendously smart to think through what you want to do. But I'm saying some examples. Recently we made a company. And they decided to fund pensioners for their medical insurance. Unbelievable. I mean, somebody can make a business out of public sector banks, pensioners who don't have a good medical insurance coverage to fund their medical insurance, premium. And that's a massive business. I'm telling you, that's a massive business. Somebody is growing very fast on that front. Now think of it from the other side. Many of you who have not been able to raise enough capital are partnering with P2P companies. Now think of it, P2P is as such is a separate group of institutions. But who they're banking on? You. I mean, as a microfinance institution. So people are trying to make business out of your business. I mean, now we have to think what way we can, think slightly different to think how can we make business from other businesses, because we have the reach, we have the distribution, and how we can within the, laws of the land try to work it out, right? So these are some of the things I was thinking like, one should think through in the changing landscape, how we can make ourselves stronger by being much more reliant on our strength, and see how others come into our fray so that our per client income goes up. And it's very important to understand per client income. The more you think about that, it's better for you, and you will be going for a growth path and profitability also better. Coming to the capital front, Ashit wanted to talk about, because Ashit came to my office to invite in Bangalore, kind of him to come there all the way. And then I said, Kisi, as an association, you have not only a role to organize a conference like this, which is amazing to see the number of people coming here, hats off. But I think there is also a role to think how we'll build this industry from a capital perspective, because this industry cannot grow without enough capital, and that too for the small and medium-sized entities. There could be multiple approaches, right? Meman Saab was talking about that, Tamalda also, referred briefly about IMF. Now let's think of what are the industry body working here, how we can use that. Like say IMF till now is not utilized. I mean, SIDBI gentleman is here, my colleague only. So IMF has not been utilized. There are reasons for that. But can we think of what we need to do to also do a regional play of IMF? Let's look at some of the states and see where IMF can play a greater role. What tweaks we need to do? Can the association work with government and also SIDBI to figure out what can be done there? See, we have a Impact Investor Council, IIC, working towards the impact world, and microfinance is the most appropriate impact institutions we see, right? What can we do with IIC to see that the family offices can be pulled in for the microfinance investment, right? That is the second thought I had. The third, sir, you are in a region where there have been very large industries in the past, and there's still very good amount of industry here. I mean, I'm talking of businesses, not completely always industry, but businesses. Like look at a lot of these businesses would need your support, because either their laborers need loan, either they have to do an insurance distribution for their people. There could be multiple things which this type of larger, today I met a dairy company having an employee of about, 1,500 people. Now think of this 1,200 doesn't, get a loan so easily, right? So how you can be facilitative towards that, and then bring them to the table and say, hey, can you make a corpus for the microfinance institution equity side? So we have to think from that perspective as well. And I think one of the role which the local association play is to bring people together to think from a capital perspective. It's very important that we focus on that area. I know Tamalda has warned me twice that I'm exceeding my time. Yeah. So happy to
we'll get into the micro issues. Thanks, Abhijit. So very, very clear-cut talks. Because without capital you can't grow, because this is the most leveraged business. I mean, the banking finance is the most leveraged business. Abhijit, you spoke about giving loan 30 lakh to Mr. Ajit Maiti and to start his organization, which is, I suppose, is the oldest in the eastern part of the country, right? as a MFI. So let's hear our SIDBI person Sachin, because you played a similar role for Bandhan. You were, when nobody was, Bandhan was not known, SIDBI came, I think 20 lakh SIDBI gave to Bandhan at that point of time, and then you picked up equity also, etc. But tell me, off late, I mean, how integrated you are with the microfinance space. I know that Prayas you have been doing, which I think your colleague also spoke about that all. But otherwise, is SIDBI playing the right kind of role which it used to play, say 10 years back in the microfinance, or you see no, SIDBI is not that as rooted in the microfinance, or the kind of, it was actually playing a much larger role earlier and not now. That's the perception. Is that correct, sister? Please. Acha, Avijit worked on the first SIDBI loan. Anyway, please carry on.
Thanks, Tamalda, and my apologies for joining late. But you said right. In fact, what we think is, like, if you see the mandate given to the SIDBI as per the SIDBI Act, there is the promotion, development, and financing of the MSMEs. So definitely there are three parts: promotion, development, and financing. And we always say that development comes before the financing. D comes before the F. So that's the, in fact, key perspective which like we are working on right now. You are right, okay, the 10 years before the SIDBI's role totally different, and then now the SIDBI's role is as per the scenario is changing. Priyas, like you just mentioned, that there's a very good intervention, but definitely it need to be scaled up, and we are working hard in that scenario also. And okay, there was a time, in fact, a period where maybe the interaction of SIDBI with the MFIs was not as the 10 years back, but again we are in fact going vigorously in this direction. In fact, I have also interacted with many of the MFIs, and if you see, in fact, not only that part, not only the financing part, in fact, you see the development part also. Like we are dealing with many of the MFIs as well as the MFI associations also. Like today we launched this V-Lead program. So V-Lead program initially we launched with the Odisha, with the OSAFI. And prior to that also, like my UPMA friend Mr. Sudhirji was also here. So with UPMA also we started with many of the development activities. ODOP scheme was one of the initiatives we took in the UP with the Microfinance Association of Uttar Pradesh. Similarly, in fact, after this successful launch of this LEAD program here, in fact, we are also targeting it to, in fact, replicate in other states also with other microfinance institutions. And definitely, the another side, if you see, that besides Priyas, besides the developmental roles, the another thing is the strengthening of the MFIs. So there I find, in fact, like we think that besides financing role, capacity building of the, I will say that MFI employees is also an important part. Like in V-Lead also, we kept the trainers training. Like our MFI members have to be strengthened first, and then they can contribute in better way. Similarly, in fact, besides MFI, we are doing many other developmental roles for financial inclusion sector, like for the SRLMs, we are working in the Bihar as well as Jharkhand and Assam also. In many other states we are planning. In fact, we are working, in fact, you can say through the north to south and east to west, from Leh Ladakh to the Kanyakumari. In fact, these are the some things, in fact, the activities, there are a lot of activities which are really, the time constraint is there, but thanks.
Yeah, thanks, Saurabh. So we started with the boss of an SRO. We have macro view, and now we'll end the round with Sachin. He's from ICRA, leading rating agency. So, from a rater's perspective, how do you see this financial inclusion?
Thank you, Tamal sir. And first of all, it's a privilege to be sitting here and talking to people who are the industry stalwarts.
Just small, for my knowledge also, when after, what is the minimum size one needs to have to get itself rating? Like a 10 crore, 20 crore, 30 crore AUM entity can get itself rated, or you need some 50
In fact,
crore, 100 crore?
even a lower size entity can get rated. Definitely, since scale is one of the parameters, so rating might be lower, but for the rating perspective, we can rate that. That's not any, there's no size constraint in terms of rating an entity. Yeah. So now coming to financial inclusion as a topic. So first of all, on the prima facie, when we look at financial inclusion, that does not seem to be gelling with how a credit rating agency should be looking
After Sachin says, this will be end of the first round, so we'll take a few questions from the audience, then we'll get back. So whoever wants to ask questions, please get your question ready, and please get the microphone ready for the floor.
So, but when we look at ratings, now one would look at the P&L, the balance sheet, the investments, everything coming in. And how do we see financial inclusion, which is the core objective of MFI as an institution to be into the system? Beyond it being a core objective, it is also related to all the three aspects: investments, operating profitability, and even credit cost. And I'll show it how, because first of all, I'll bring it an analogy here. Once I was sitting with an airline team, they were setting up an airline, these were the early days of this entity. They were explaining me a step-by-step aspect that, because generally running an airline is kind of a loss-making business globally. So they say that you need to go into to the extent of details that what kind of paint you are putting on your planes, which can reduce the weight of the plane and can help you save on operating cost. So I will link the same here. But before that, we need to understand the building blocks of the financial inclusion. RBI defines financial inclusion as access of financial services and adequate and timely credit. So both the things MFI are well placed to provide to the customers whom they are serving. You can reach them on the doorstep, you provide them those services, credit is already being provided to them. But what about the other financial services? We are talking about the savings, but why stop at savings only? Why not move into investments? Everybody talks about putting SIP in mutual funds and all that. Okay, that may be a risky product proposition for the customers whom we are dealing with. But what stops the business from evolving into a BC kind of a relationship where a borrower, a customer, paying 100 rupees per week can start a bank RD? So that, because many times we have seen the industry faced a problem that customers run into trouble. They need some 5,000, 10,000 kind of a emergency loan to help them come out of that system. But if they had been put into a habit of saving 100 rupees weekly or fortnightly, they could end up having a 5 to 10,000 kind of a corpus at the end of 1 year, at the end of the tenure of their loan, which can help them in overcoming those emergencies. So eventually, it helps MFIs improve the effort which they do into collections, because customers are already having some cash with them. So operating efficiency improves and your asset quality improves. And when you can link all this financial inclusion agenda and showcase it to, like, today ESG is a buzzword. Everybody is talking about setting up some green bonds, some social investors coming in, some impact investors coming in. They want to fund entities. You are into a domain, but end of the day, they also need yield. Nobody can survive that if you are not profit making just on a philanthropic purpose. There will be very few organizations who can give you money, but not everybody. If we need those DFIs, development financial institutions or impact investors to come in, we need to showcase that how we are providing a social service, not just of a microcredit, but a broader financial inclusion agenda we are meeting, which can fit well into their scheme of things, and they can provide lending. So apart from thinking in a way that achieving financial inclusion of all these borrowers, the bottom of the pyramid kind of customers, is an important social element. But if you link it with your business objectives, it will get inbred into your culture, and then it serves both the purpose. It meets the financial inclusion needs of the people, and it helps you run your business profitably, beyond which obviously nobody can survive in that case. So I would stop there.
Yeah,
so,
thanks Sachin. Yeah, anybody wants to have any question to anybody? Yeah, sir.
Actually, Mevan जी सब जो बताया है ना, क्या है जे इन हाउस जो इक्विटी why we cannot raise? Because actually individual cannot give the equity to any microfinance organization. Is it not allowed? I don't know. Companies are allowed. Why not the individual? Why not the borrower? Is there any restrictions in the law? If there is any restriction, why not we go for the moment that it is necessary? Company, they are taking, they have a high profit. Why not an individual? Individuals are investing in the MF, that is a mutual fund, taking the high risk also. So why not here? That is my question.
See, when I think probably you will be a better person to say that, or Abhijit will be able to. Yeah, Abhijit.
Take.
When he is talking of, are you talking of the point which was raised earlier that the staff members, see earlier Microfinance used to take what we talked about Bangladesh as well, that the deposit, are you talking from that perspective or are you talking of individuals? Individuals can give, there is no restriction. See, you can have a company, only thing is from private limited you will become public. You know, if your number of shareholders increases, and that too has happened in multiple companies. I'll give you an example of a company called Birar Finance. Yeah. Birar Finance is a live example. They had 11,000 individual shareholders. 11,000.
Either
doesn't matter.
When you go for a public issue, individuals are going to be subscribing that.
No, sir.
Otherwise also private
Not for
placement.
public. I'm talking of a company which is not listed.
Private
but
placement.
Private placement can happen. The company will become public because the number of shareholders increases. But I said that
It's needed for, I think the SEBI, SEBI license.
you don't need to go to SEBI. It's not required. It's only that your company status becomes public.
Okay.
Unlisted public company. So you can have, like as I said,
In
Birar
West
is a live
Bengal, I think
example.
no one is practicing. We can practice now.
You can. I mean, there are a number of companies which has more than 50
So many MFIs, I
shareholders.
think they even do not know.
Yeah, there are. You can have as
So
many
you
shareholders.
can
There's no
have the
restriction.
consultancy about it.
Sir.
How
No,
we can approve.
No, sir,
propose.
individuals are allowed, the employees also can pick up, no? So by the same logic, if the employees can pick up, why can't an outsider pick up? Employee also is an individual. So there is no bar, there is no regulatory restriction.
If you recently have seen Shark Tank episode, the company were wearing that hum company nahi kranti hai. If you would have seen, they also said at the time when they are going down, they took all the employees' equity, more than 60.
Anybody?
Sir, just to add one more point here.
Please.
So you can also look at the cooperative model also. Now cooperative model also, cooperative societies are also there which are into providing these small loans. Whether it's an employee society, it may be a railway employee society or some other society, it may be a regional society, multi-state society. So they also, it's like they make them members, they take money from them which they further lend to their members itself. Well, that's a different model.
Okay.
Yeah. But as an individual shareholder also, these can be participating in the equity of the company.
Any other question anybody wants to have? No? There. Can this gentleman have the question? Yeah. Please.
Hello.
Yeah.
I hope I'm audible. My name is Anindo and I'm the credit head of Monex, so it's a peer-to-peer lending company. My question is to Mr. Sachin Sachdeva. You rate the various companies, right? Now, do you actually do some kind of reconciliation to see if there is directional alignment between, say, ICRA, CRISIL, Fitch and CARE ratings? And is it, that's the first question. And the second question is it actually possible that somebody who's rated very highly by ICRA could be rated very lowly by CRISIL and vice versa?
Sure. So if I have understood correctly the question, your point is that how much can be a divergence between the rating between different rating agencies? Yeah. So first of all, if you look at all rating agencies follow an independent model. So theoretically, yes, and we have seen that empirically also that for most of the entities, the ratings can be different, assigned by different rating agencies. But the key point to ponder over here is that what goes into deciding on the rating part. You yourself said that you are into the credit team, you're the credit head only. So the different aspects you look into remain same. You look at operational, managerial, financial aspects. everybody looks into different same parameters only. But how you arrive at a final conclusion while putting up a rating could vary. And generally, if you look at the parameters, the variation usually is small. There are very few instances when you see that there is a difference of multi-notches, but having half-notch difference may be kind of an outlier kind of a change, or one-notch level rating difference, that one can very easily find very common in the industry per se. Welcome.
Thank you. Any other? We can take one more question and then we shift back if anybody else has. No? Good. So let's have the second round reverse. So you ended, so starting with you. Time permitting, we have about 13, less than 20 minutes. So we'll see, 17 minutes we have. So I don't know whether we can have one more round. So maybe 2-3 minutes each if we want to have. So can you give us a sense of, in your universe, ICRA universe, in this financial inclusion space, like how many companies you have rated, what is the average rating kind of thing, how many are good, how many bad, how many ugly, what's the scene and what needs to be done? Quickly, 3 minutes max.
So within financial inclusion space, we can club two segments. One is NBFC MFIs and other would be the small finance banks. Now when we talk about NBFC MFIs, I think around 25 to 30 entities we have a live rating at present, which would include almost all the major entities and small mid-sized entities, would be covering more than 90% of the NBFC MFI's AUM. So from that perspective, we are able to interact with them here and get their views, which get built into our systems and models. And from a ratings universe perspective, the lowest rating in a financial space, or say NBFC MFIs, would be in say probably BB category, and highest would be going till A+ category, which in the current universe we have. And the median rating, if we were to look at, would be the investment grade only, that would be BBB category.
What are the key findings? What are the issues? Like, is it the balance sheet strength? Is it the governance issue? It's the quality of management issue? What are the issues?
Okay, sure.
So that they can learn. You know, they have come here just not to listen, but to some takeaway to help them to build their institutions.
Sure, definitely. So there are 2-3 issues which are sector level issues. Say we are dealing with kind of customer segments which are more vulnerable to income shocks. They don't have much wherewithal with them. That so any shock comes in, the asset quality gets impacted significantly. The other aspect is ability to raise funds in a timely manner. If the cycle keeps on running and you keep on getting funds at a timely place, whether it's equity, as we were discussing earlier, without equity you cannot grow. So equity comes in, it's a game of leverage, you're able to borrow. So if that cycle keeps running, now important for that aspect is what we have found across many entities, even if they face financial trouble, but if they remain transparent in terms of sharing their data with the lenders, putting up their numbers as they are, one can easily make an opinion what is going inside the entity and what is their plan to back that up, how they want to come up after this crisis. So if lenders get convinced on the same, they can probably keep the funding cycle lengthy. So transparency, I would say, apart from all the operational efficiency and everything, would be a key thing to maintain in your relationship with the lenders, with the investors, with the rating agencies, everywhere.
Yeah, please. Quickly.
So I think he's an expert on rating, and I had the privilege of rating at least 7-8 institutions myself using a US tool called Camels. See, the challenge in all this is, and with due respect to all the rating agencies, because I have also done this, so the capital becomes very, very important, whatever you do. I mean, if there is not enough cushion of capital, see, I think Tamalda said in the beginning itself that we deal with unsecured segment, which is not the flavor of the season for multiple reasons, because we have gone through 2 cycles of demonetization and COVID, and we've seen that the highest loss rate is on unsecured segment. And in view of that, any rating agency who looks at rating has to look at what is the capitalization. If you don't have enough cushion of capital, looking at the historical loss rate, subjected to all this COVID and demonetization, if you don't have enough capital, your rating will not go up, rather it will go down. So this is very, very important to understand that capital cushion is important, and very important than any other parameter you look at.
So Saurabh, because you are going the reverse way, can you tell us if any one of them wants your assistance in terms of loan and getting into the other schemes? No, because you are, I will not call it soft loan, but definitely cheaper than the bank, SIDBI money, and also Prayas, etc. Could you just please, actually having the stalls here, they will continue to do their business, so nothing can be said. You allowed them to have stalls. But anyway, so can you give us again, these gentlemen, they are from the agencies, they will have their key takeaways. What are the things you look for? If I want to get your assistance, both in terms of getting the Prayas agent or your money, so-called soft loan, what are the qualities, what are the parameters you look?
All right. See, loans, yeah. Loans, like you are talking about the loans maybe in two ways, like SIDBI do direct finance as well as refinance. So major portion, you know that the refinance is the major portion of the SIDBI. But then for the direct finance, we have around 80 branches all over the India. Like Kolkata, we have one zonal office as well as the branches. Eastern part also we have the branches. So definitely we used to launch special schemes where the loans can be available on the cheaper rate and easy terms. Then definitely like government schemes also we try to club with them, subsidies and all. Most of the government schemes, the schemes related to MSME is the government channelized through the SIDBI. And digital part, like also our DMD also in the morning mentioned that we are doing a lot of digital activities. Online PSB loan, OPL is the one of the thing in which loans are being sanctioned within the 59 minutes. And in fact, for all the loan applications, either the branch or through the our head office like we are doing different activities through head office, like fund of fund we are managing. So loans, all the things, all the loan applications are now digitalized. You can apply online. If you are applying through OPL, 59 minutes in principle sanction is there, then you can visit in any of the SIDBI branch. We have different schemes. It's maybe for the green field, it may be for the brown field. For the small entrepreneurs, like micro entrepreneurs, earlier we were having a scheme that the MEL. For that, as you know that we have launched through the Prayas, where you can get the loans at the lower rate of interest, and small loans can be on the lower rate of interest. Then different SIDBI's associate concerns are there. Mudra, you know, Mudra is a refinancing agency which is catering to the small loans. Similarly, through CGT MSC, we are doing a wonderful job, and more than 1 lakh guarantees have been issued and 1 lakh crore loans have been sanctioned from them. And recently, in fact, we have increased the limit also, and the cap has also been properly covered now.
Thanks. Abhijit, your turn. You did say in a different way, but tell us as an investors, again, there are 1995 you gave 30 lakh to Mr. Ajit Maiti. Now there are so many people there, I'm sure they are looking for money, both in terms of loan as well as investment. So what are the key things that you look, what are the key parameters in a brief way, 2-3 minutes, to give them money, both as loan as well as investment? That's one part of it. And second part of it, you would not like, you'd hate me for saying this. You yourself, not you, but you, many of you say that you are impact finance, you want to change people's lives and all. But at the end of the day, you want 20%, 22% return and all. So you make my life miserable after taking money from you. You drive me like a donkey that, you want to take the control of my company, you do everything. Because all these things, so bakwas, baat karte rehte, impact finance, etc. But at the end of the day, you are there to make money, like the others also. So tell us these two parts quickly, 3 minutes.
Absolutely, Tamalda, I think...
what you look, what are the parameters to be entitled to get your money? And second is, what is the true face of an investor?
Yeah, I think very pertinent question, Tamalda, and I think most in the impact world, even the DFIs, I'll talk of all of them. So it's very important for us to understand why an investor invests, and the simple and the most important and simple reason for them is they have to make a return. Now return can vary, and we can talk it in terms of IRR, we can talk it in terms of times, what they call it multiple, like I put in 100 rupees, how much a multiple I make, 300 rupees on that, 400 rupees, 3 times, 4 times, how much I have made. So I think the investors, whatever category you take, you will rarely find an investor. You may find a grant-based investors like probably the or others who don't, really are not as focused probably on the return side. But if you look at any other investor who has taken money from other organizations, including the DFIs, I mean the bare minimum IRR people look at is 15%, bare minimum over a period of time. So below that, I don't think anybody even talks of return, whether it impact or otherwise. And you have to understand that all the businesses they invest in don't give them the return. So they will always have to think of averaging their return. So somewhere they will lose their money, somewhere they will earn more than 15%, somewhere they will be more than 20. So it's averaging out. So they don't think that every case they will make 15. So they will have to think of somewhere where they will make much higher. So I think, and the return can only be made when they can exit. That means either somebody buying them out, or else, some strategic investor buys them out, or else you go to an IPO. Now looking at the microfinance sector over the years, how many companies has gone IPO? It's practically impossible for everyone to go IPO. So you have only two options. One option is that, as you grow, somebody else buys your equity. So there's an exit given, or else you have a strategic, means a larger entity buying you, which can be called a merger, acquisition, whatever term you use. So effectively, until you grow at a certain pace, it's very difficult, for an investor to think of exit. And so it's like a chicken and egg. Agar main aata hu aaj, if I come here and if I don't see the path of exit, I'll not come. But path of exit can happen when you're growing at a certain pace.
30 seconds more. What do you look for to put in money? Just in 30 seconds, because I have to.
Correct. Yeah. So I think three things very, very important. One is whether there is money or not, the most important tick box is the person behind the project. The person behind the project or the management team. That's the first and foremost. Second is, transparency, and governance. Very, very important. You have to have transparency. Everything should be very open. And third and foremost is, is there enough market? And you are trying to address that market. These are the three things. Other things can fall in place.
So business model come third. First your character and then your governance thing, right? Okay. Thanks. We have about 5 minutes. So Anjan, 2 minutes, and you 2 minutes, and I'll have 1 minute. Mr. Dasgupta, you tell us, in the first session everybody spoke, including our Guru Chandrasekhar Gosda, that about it's both take and touch, that's the right kind of model. Now here we are talking about, technology playing a very big role in terms of financial inclusion, etc. Just in 2 minutes, can you tell us how this is it through, like you yourself need to change, or is it through collaborations and cooperation? If that's, then what are the entities you collaborate with, etc. Just 2 minutes, quickly.
Yeah, so ultimately the model stays. There might be a slight deviation in the model, now the bottom of the pyramid have got various options. They can take loans from anybody, across all entities. After the recent RBI circular. So I think we should slowly start forgetting the days when we take our investors and go and ask our clients कि आपका क्या impact हुआ है, आप बताइए, and they cry and tell us कि मेरे पास 5,000 रुपया था, उससे हम 1 लाख रुपए बनाए and हमको बहुत help हुआ है. I have taken a house building loan. If State Bank of India comes and tells me आपके ऊपर क्या impact हुआ है, आप बताइए. I'm not going to cry and tell them. I'm going to tell them I've given you interest. Please go. That's the way it is going to be. So slowly we will have to get back to that particular kind of model. High touch model, I agree. High touch model can also be done using digital. The extent of meeting the clients can be reduced sizable, giving the clients benefit, like not calling them to the branch for giving them loans, giving digital created documents and giving the loan. We are doing all that. We are tying up with companies where these can be done digitally. We are giving clients app. They don't have to come to my office to see passbooks. They will get it automatically on their apps. And then, as I was mentioning in the previous session, that if you go to a poor household, they will have 1 smartphone or maximum 2 smartphone. It's just like our olden days TV, that we had 1 TV in the house. So that smartphone is used by the full family. And then it's also wrong to assume that the client cannot do digital, actually access digital information. They can access digital information even with the help of their children or somebody in the house, and they can use those kind of platforms. I was also mentioning that, I mean, I've been to clients' places where the questions asked is most important. You go and tell them that आप कितने जन ऐप यूज़ करते हैं, they will tell you nobody uses app. But you go and ask them, आप कितने जन Amazon यूज़ करते हैं, Flipkart यूज़ करते हैं या Paytm यूज़ करते हैं, everybody will raise their hand. You know, so it can be done, it should be done, you know, and I think that's the future. Combining both high touch and digital is possible.
Thanks. Thanks. I would have loved to explain all these things, but now running out of time, just 2 minutes left. Gigi Saab, a little uncomfortable question again. So you are the SRO, sort of your responsibility is to that nobody is breaking the rule and doing things and all. And you are the oldest one. MFin come much later, Sadhan and all. But can you give us, I mean, what kind of role actually you can play? Because are you really independent? Can you really assert yourself? If I am doing something wrong, can you really punish me? Because ultimately I pay the fees and you run your salary, and your people's salary comes from my contribution to that.
Thank you. In fact, as an SRO, we are playing a role on behalf of Reserve Bank of India. The Reserve Bank of India has appointed us as a SRO. So we are supposed...
But sir, RBI is not giving you salary. Salary is these people are giving.
No, I'm coming to that. I'm coming to that point. So in case of SRO, our role is to get the information and give the feedback to Reserve Bank of India. There is a regular returns on a monthly basis, quarterly basis. There is a meetings, discussions. All those things are there. So RBI is the one who has to take the action, whatever it is. Secondly, as regards your point, that is precisely why we have made it, at least I know our organization, we have made it a point to ensure that the revenue from the membership fee should be minimum. For your information, Sadhan's revenue in terms of membership fees only just 40%. The remaining 60% is we are raising from various other programs, projects and other kind of programs. So this is precisely, we don't want to be entirely dependent on our members by if they are contributing 100% of the revenue by membership, we don't have a say in it. If it is 80-90 also, we don't have a say in it. That's why we have made it very sure that it should not exceed more than 40 to 50%. That apart, I am saying that we are playing a role on behalf of Reserve Bank of India, and we would be continuing to do that.
Very, very reassuring to hear that, Mr. Menon and Gigi. That's why I asked you to have the last speaker. So you are there, you are watching the industry. So all these people, like they are aware that RBI is there. They also know that the SROs are there. So that brings us to the end. We are exactly 3:44. So I would not take more than 30 seconds. So both Gigi and Anjan, they were said that, it's like, is it okay not to be okay? We are here forever for good. But others, the rating agency, the SIDBI and investor, they have raised certain granular points how to rectify certain mistakes that we have committed, we meaning the industry, and how to go ahead. So I don't want to explain all this. You have heard, I think it's quite useful, and if you find it interesting, give them a big hand, please. Thank you for listening to us.
Thank you, Tamal sir, and thank you, esteemed panelists, for the insightful discussion. I would now like to request Mr. Manoj Nambiar to please come on stage and gift our panelists and the moderator with a token of our appreciation. We'll start with Shri Gigi Maman, Executive Director. Please accept a small token of our appreciation. Ladies and gentlemen, request your applause. Shri Sachin Sachdev, Vice President and Sector Head, Financial Sector Ratings of ICRA. Thank you, Sachin, sir. Our moderator will go next. We'll go next with our moderator has already received it. I think. Thank you, Tamal sir. Thank you. Special thanks to Sri Anjan Dashgupta. Thank you, sir. Shri Abhijit Rai, UC from UC Inclusive Credit, Bangalore. Thank you, sir, for your insightful discussion. And Shri Saurabh Bajpai, thank you, sir. Sorry, just give us a minute. Mr. Saurabh Bajpai, thank you, from Sidbi, Delhi, thank you. Thank you, panelists.
सिखा है